Folks, good morning and welcome to Swing Trading Today. It's been a while since I did one of these morning commentaries, and it's not that I haven't been speaking with members and trading the markets. We certainly have. So what we're going to do today is go over where have I been, what have I been doing, because it does affect you, the viewer. Two, we're going to go through members' stock chart request. And that's where I review the symbols that our gold members submit for me to review. And lastly, we are going to segue over into the pre-market activity to discuss what's going on this morning overseas in the currency markets and in the stock market as well as the bond market, which is becoming extremely important. Not that it always has not been important, but now it is really, really becoming influential relative to prior years. So let's kick things off. Where have I been? What's been going on? Well, as I've shared in the past, we are redeveloping the website. Anybody that's visited the website could see that, yeah, it does need a refresh. So I've been working on that, and I have developers that are overseas in the Ukraine, really nice people, and very good at their jobs, very detailed. So I spend a good amount of time each morning going over each page, making sure that it's accurate. In addition to that, we're developing a new members dashboard, and that gives you access to our positions, what my stop loss points are, what my rationale is for any one particular trade. So it's going to be a really exciting rollout in the next couple of months. I'm looking forward to it. Prices are going up, so if you want to join, if you're thinking about it, please sign up now. Lock in your prices. If you're an existing member, we have a membership loyalty program. We do not raise prices on existing members. I still have members from when I first started paying $19.99. So think about that. It makes me feel good. Let's segue now into member stock chart request. I'm going to begin with the TBT. The TBT puts you short of the 20-year bond note. Okay, so this has nothing to do with the yield, but you could think about the fact that the yield on the 20-year bond price is moving in correlation with the TBT. So as the TBT moves higher, that means yields are moving higher. All right. Now, what's critical here is to note that this is a weekly chart, a multi-year chart, and I have pointed this out to members in the past. I believe this is the first time I'm talking about it with non-members as well. And we have an inverted head and shoulders setup, left shoulder, head, right shoulder, and at current, we are now breaking out of a long consolidation, not the neckline. We already broke out above the neckline back in February. Remember that big sell-off in the market? Now we are breaking out of the consolidation that formed post the breakout. This is a significant move. Yields are going higher. They have broken out on the 30-year yield. We are at 2011 highs. And folks, they are going higher. Absent an influx for a geopolitical event into our bond market, absent that event, yields are going higher. Daily chart. Look at the move here yesterday. This is the Jay Powell move and the Europe move. Why do I say Europe? Because I don't have a name for it anyway. There's a fight going on, or was going on, it's probably still going on, between the EU and Italy. They have a new government there, a right-wing government, a populist government, and honestly, I happen to like them. And they are duking it out with the bureaucrats in the EU. They came to a settlement on budget caps yesterday. That allowed money to rotate back out of the bond market into the European markets. That sent yields rallying, and it didn't help that Jay Powell was out there helping talk up the yields and sending the dollar flying higher. Now, this is an expensive market. And what I've shared with members is that, and when I say market, I mean stock market. It's very expensive. And thus far, the markets have been shrugging it off. But we are seeing signs of rotation out of the stock market. And you may be saying, what are you talking about? The markets closed up higher yesterday, the day before. Yes, they did. But they closed well off the highs of the day. You've been seeing topping action on the large caps for several days now. The small caps are broken down. I went over this with members on Market Wrap last night. Members, if you haven't seen it yet, go check out last night's Market Wrap. It's in the members area. So watch out for the TBT. I think it's moving higher. It's a bit extended here, but I do think we are moving higher. And we are at 2018 closing highs effective yesterday. Now, what else is going on out there? That's a concern for the market. And if you haven't guessed it already, I've opened up short positions in the stock market, the S&P 500, and the semiconductor sector. Small positions, not large yet, but we'll be looking to add on a break if we get that break. I may be wrong. If I'm wrong, we stop out with a small loss. Now, Deutsche Bank is back in the news again. They had a very strong July, a very weak August. Last month, they rallied but closed off the highs of the month significantly. This month, we're now retesting the lower band of support yet again. Unlike the U.S. banks, which did quite well yesterday, by the way, finally, on rising yields, the share price of Deutsche Bank has never, ever recovered from the financial crisis. So this is a very weak bank. This is a sick bank. And if we begin to break down into the single digits on Deutsche Bank, people are going to ask two questions. One, what's wrong with Europe? Two, who has counterparty risk to Deutsche Bank? Meaning, who is at the opposite end of the trade institutionally with Deutsche Bank? And that is pretty much every bank in the world. So watch out for Deutsche Bank going into single digits. Facebook. I warned about Facebook. I warned about the Web 2.0 stocks. I'll link to it at the end of this video. Weeks ago, they were slicing their own throats. That was the phrase that I used. You have the Justice Department now looking into Google for antitrust. Facebook appears to be in everyone's crosshairs now. And these shares on a weekly basis have broken down. We broke down below the lower band of the rising uptrend channel the week of September the 10th. We have been unable to recapture that support level. So there's a good chance that we break. Would I go shorting right now? No. I would wait for the break below 158.87. Members, more to come here. Shopify. Shopify is a classic momentum stock which is beginning to deteriorate. It began in earnest back here while we put in a new high versus the prior high, the June high in July. When we pulled back, we broke down below the prior low. We consolidated, formed a W formation, rallied, but yet again, another divergence, meaning we could not take out the prior high. We put in a lower high. And now the question is, do we break out of this trading range or do we begin to break down? We have the Stokes that are rolling over here. Up volume very weak, while down volume has been above average. Weekly chart. So to me, the game plan is, this jumps out at me right now. I'll get to my game plan in a second. This MACD appears as though it is going to fail. This is what I like to call a head fake retest of the fast line approaching the slow line. Note how it's already rolling over. Now, let's update the chart. Okay, so Shopify on this weekly chart just retested this week, the lower band of this triangle formation. It's a formation that's been in since, let's say, mid-July. Now, if we break, you're not going to want to be long of Shopify. If we break out above the 168.95 level, then it's game on to the long side, right? We can't divine what the stock market's going to do or what a particular stock is going to do. What we want to do is we want to wait for a breakdown or a breakout. That's the market telling us which way it's going to go. We're not crystal ball readers. All we can do is identify where our support and resistance levels are. Now, it appears as though on RSI, we broke out a couple of weeks ago. We're pulling back and doing a retest, which is actually a bullish thing. I don't see a breakdown here. While, yes, we have a divergence, meaning lower highs ever since really back here in May, lower highs while we put in higher lows. I'm not all that pessimistic because by and large, a lot of this has been a trading range, and that really can skew your momentum indicators. So if we broke out on Shopify, long story short, I'd be bullish. If it breaks down, I would be bearish. Simple as that. Now, if you wanted to take advantage of the fact that we're close to this lower band of support, fine. Put on a small opening position. Very small. Maybe a third, a quarter of your intended allotment. Use a stop loss right below the lows of the week. And get out. And don't forget about this MACD. Domino's Pizza, weekly daily chart. We are in a trading range. I was very bullish on Domino's. I'm far more pessimistic now. Not pessimistic, cautious. That's a better word. It's still a very good company, but our indicators are putting in lower highs all over the place, as is price now. Now, it's yet again, like with Shopify. If we break down below this lower band of support here, well then, we have a broken stock because we put in a lower high, and now we're beginning to put in lower lows. Now, if we break out above this upper band of resistance here, well then, what we have is a breakout of a consolidation. So let's not read all too much into recent weakness, because it could simply be a consolidation. Now, as I speak right now, the S&P 500 is under a lot of pressure this morning, so that does not bode well for most of the stocks in the stock market because they tend to trade with the S&P 500. Weekly chart, we're in a consolidation here. Watch the 273.63 level. Stokes are rising. We're down this week. If you're long, I would use a stop right below 273.63. If you want a tighter stop point, you could stop out on a new weekly low. Commvault Technologies, daily chart. We've been watching this one as a potential long. It has pulled back. It has broken support. Yesterday, it flashed a doji formation. Now, it could quite possibly rally today because a doji formation is a signal that this pullback may be short-lived. We may get a rally back. I am worried about both lines on Stokes now trading down below 50. It's not the way you'd like to see momentum going. And what we've learned in the past is that when you have both lines on Stokes trading down below the 50 level, if you get a rally, it's best to sell that rally because rallies tend to fade. Weekly chart. Stiff resistance at the, let's call it, $71 per share level. We'll round up here. We've been watching this stock for a while. We have been waiting for a breakout. Now what we're seeing this week is a pullback and a retest of the breakout point. We broke out of this triangle formation back here the week of August the 27th. I think we've been watching it for that long. But we've been disciplined, waiting for a continuation breakout, which hasn't come yet. Now we're doing a retest. We may be long sometime soon of Commvault Technologies, but we need to see a little bit of strength here on the shares. If we close down below this lower band of support, then it's off our watch list. But right now, it remains a watch with a caution flag next to it. We have a nice double bottom setup on weekly RSI. And you may be saying, RSI is now pulling back, Bob. Yes, it is, but we are not breaking down yet anyway to new lower lows. Okay? That's what we're watching for. And as I just mentioned with Shopify, is what you're seeing on DPZ. Here's Shopify. A potential failed head fake on MACD. Now take a look at Commvault. Same deal here, right? It's a head fake. A lot of newbie traders, this is their first indicator. MACD is a lagging indicator, not my favorite. So Commvault remains a watch. Ecopetrol, I've been speaking about this stock for a while now. I've been loving the chart. We had a bull flag set up. It's broken out here. It's probably going higher. We may get a pullback as we are now leaning into the third standard deviation Bollinger Band. We are slightly off the highs of the week. Daily chart, bullish reversal bar yesterday. We're in a consolidation. I think we could quite possibly break out yet again. What you want to do is watch the price of oil. Micron Technologies, daily chart. You know what? Let's go to a weekly chart. Daily chart's a mess. I would avoid right now. Weekly chart. This stock was in a bull run. Again, we're short of the semis. That bull run is now over. We have lower highs on price. We have broken down now to new lower lows. I would avoid these shares. Rallies are being sold, as you would expect. Watch your Stokes, way down below the 50 level. Ultimate oscillators beginning to recover here a little bit. But price and volume trump all indicators. And right now, price is not looking good. And volume inconclusive right now. The week is not over. I would avoid these shares. Unless, of course, you're looking to short. And I would short on a break below 41.50. The last chart up, VNOM Energy Partners. This is another, I believe this is a master limited partnership. This is another, let's call it, stock, quote unquote stock, that is doing quite well with the rising price of oil. Bullish reversal bar. Folks, we are seeing inflation. The Federal Reserve won't admit it, but if we don't have inflation, then why then is Jay Powell, and probably rightly so, jawboning yields higher? I think one of the reasons is that the stock market is rallying on threats of rising yields, and when that bubble bursts, and it will burst, it is going to be ugly. So he may be trying to do a preemptive Greenspan-like irrational exuberance bubble pop to try to deflate this market a bit. So be careful. For those of you that are too young to remember Greenspan and irrational exuberance, go to YouTube, type in irrational exuberance video, and you'll see what I mean. And the ensuing sell-off, although short-lived, the ensuing sell-off in the stock market back in the 90s. Let's segue over into the pre-market activity. Okay, let's begin with the 10-year Treasury note. We spent a good amount of time earlier in the video talking about the 10-year Treasury note and the bond yields. And this morning, the note is down again. That means yields are up yet again. They're trying to consolidate here. Let's go to a 4-hour chart, a cleaner view. We're trying to consolidate here after a big sell-off yesterday. That meant that yields were ripping higher to, again, highs not seen in several years. In the case of the 10-year, not since 2011 have we seen yields this high. Let's take a look at the dollar. The dollar has pulled back off the highs of the session, the overnight session, but we are up yet again. Now, the odd part, and it's an interesting convergence anyway, is the price action of gold. Now gold, let's pull back for a moment to a weekly chart. Gold, unlike the gold miners, which put in a new monthly low in September, did not. It has been holding support while the dollar has been rallying, which is a good sign. Now, we do have resistance above here at the 1219.30 level, but we have RSI rising. So gold, relative to the dollar, is looking pretty good. And this morning, the dollar is on a tear yet again. And what is gold doing? It is up. So what signal might the gold market be sending us right now? It's probably sending us a signal that the Federal Reserve is behind the curve. For all of their chatter and for all of their denial of inflation, the Federal Reserve is in all probability, in real terms, behind the curve on yield. And gold is beginning to reflect it. Let's take a look at oil. Oil is down this morning, but is certainly on a tear. Let's segue over into the stock market, S&P 500. We are down 15 points this morning on the S&P 500. Overnight, we hit new weekly lows. Now we're watching for a retest of this support level here. Now, this should have been a nice W formation, sending us off to new higher highs. It didn't happen. Note the W formation here. We pulled back, rallied, formed the pivot point, pulled back, put in a higher low, rallied, put in a lower high versus the highs of the 21st. But we put in a higher low, rallied, put in a higher high. Now we just broke down. This is not good. If we close this bar out, and this bar officially closes at 9 a.m. Eastern Standard Time this morning, below this now at current resistance level. And again, we are short of the S&P 500. I will be looking to add to that short position as we begin to see, let me rephrase, if we begin to see continued weakness on the S&P 500. The NASDAQ, we're down just shy of 50 points. We are down below support. We have lower highs getting put in and lower lows. Watch out for the NASDAQ. This chart is not setting up well, so please, let's be cautious. And I'm going to leave off with Bitcoin because I was watching Bitcoin last night and it really surged. And I just want to follow up with it. I guess I was looking at a 15-minute chart right here. It surged higher. And pulling back to the 4-hour chart, we're seeing some signs of life here on Bitcoin. Yeah. I mean, it's way too early to call a bottom on Bitcoin, but the price action is certainly worthy of watching it to see whether or not it breaks out. It's in an ever-tightening triangle formation, so we'll keep an eye on it. It's worthy of making it onto our watch list. And that is it for this morning, folks. If you're not currently a member, sign up for the 14-day free trial offer. If you're not ready yet, enter your email address. If you're watching us on the website, we hate spam too. If you're watching us on YouTube, smash that like button. Leave a comment below. And I'll open it up. If you got this far, for the first 3 people that leave a comment, also leave your favorite symbol. I will go over it tomorrow. You don't need to be a member, but it's the first 3 people, members, gold members. You can always leave it in the members area. Everybody have a profitable trading day, and I'll talk to you soon. Be well.